Right, episode 2 of the series. Gonna be risk management. Gonna be nice, quick, simple, short video. Obviously, risk management is probably the second most important thing in trading. Without risk management, you're not gonna stay consistent. You're gonna over risk, and then over risk again, and then every time you lose, you'll do 10 good trades, and then because you're over risking that one good trade, that one loser will just wipe it all out. So I personally say risk 0.5 to 1% per trade. Now, obviously, if you've got like a funded account, like a 200k funded account, risking 0.5% of that per trade is 1k. So it's really all about capital when it's coming to risk management. The more capital you have, the more you can risk. The less you can risk, but the more money is involved. So risking 1% on a £100 account, like you're gonna risk £1, you're gonna make about £3. You know, you wanna have some good capital behind you when wanting to trade, or just get a funded account. As long as you're profitable, you're consistent, you'll pass the funded account, and as long as you stay within the rules, you will obviously get the payouts bi-weekly, monthly, whatever they do. Um, Only take 2 to 3 trades a day. Now, I'll go into the day. If I win a trade, I will obviously probably stop for the day, 100%. Or if I do win in the AM session, I'll half my risk in the PM session. And even if I don't hit a TP or hit the SL in PM, I'm still up for the day. Yeah, if I lose 2 trades in a row, I probably won't take a third. I'll just shut my computer off, lock myself out my account, and just take it on the chin, journal, and go again another day. Because at the end of the day, there's always gonna be another day. The markets ain't going anyway. There's too much money in the markets for the markets to just not exist. But there's always another day. You gotta keep your risk consistent. If you're gonna risk 0.5% a trade, then risk it for like every trade, because obviously if you risk 1%, you're gonna lose, you know, two worth of trade. If you only go for a 1-to-1 RR, you're gonna lose that 1% that you've made risking 0.5 in one trade. So keep your risk consistent. Now, obviously, if you're in a trade and your entry model pops up again higher up in the trade or lower down in the trade, depending on if you're in buys or sells, you can definitely add to that position because you're adding to your winners. If you've got confidence in your drawn liquidity, you can 100% add to your winners. But I would say if you're going to add, you want to de-risk the original position and only risk on the second position as much as your first SL would be. So if you were risking 1% on the initial buy or sell, and it goes up, and you see another entry that's valid to your setup, to your entry setup, take that, bring your SL up 0.5%, and then only risk 0.5%, because if that comes down then hits both SLs on each trade, then you've only lost 1%. Do not overtrade. Do not, like, that's the worst thing you can do. That ties into the discipline and the psychology video I did last week, I think. Um, Overtrading is very bad, very, very bad for you, because you're just gonna lose. You can go into the day and only be down 1%, or you can go into the day and be down 3-4% because you've overtraded, used emotion, and just hit SL after SL after SL. I've done it myself. It's not a good feeling. For the rest of the day, you just feel like absolute, dog. Like, you don't feel great at all. Your whole demeanor just changes for the rest of the day. Now, taking a 1%, 0.5% loss, even like a 1.5% loss, it's not that bad. One good trade, you can make that all back with good risk management, and that is the positives of risk management. You can go, you know, three, four, five trades in a row, losing, 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 and as long as your RR is good, risk to reward, and your win rate is good, you're gonna make that back in two, even one trade, possibly. Depending on how much of risk to reward you make. So um, let's say we enter down here now. We're on the 1 hour, obviously. If you want to see my weekly analysis, I post it on TikTok. I'll link my TikTok in the description. Obviously we were here when I made it. Obviously, I'd come down. I said we are going to use this as support to then take previous week high and all-time highs. Obviously, we had the election as well, which Trump won, thank God. And obviously, it's bull season now, bull run. But anyway, say we were in here and we entered a buy on this, right? Stops below previous week low, targeting all-time highs, say. Obviously, you're not going to take this. I don't think I know anyone who swing trades NASDAQ, but this is at 8.5 risk to reward. Now that means you risk 1%, which is like, if you're on a 100k account, 1k, you're making 8.5k from only 1% risk. So that means the next, obviously if you have a high RR, you're not gonna have a very high win rate unless you have like amazing precision in the markets. But that means you can go 8 trades, risking 1%, losing every one to make your money back in one trade. Basically, as long as your risk to reward is high enough, you're good. You can have a 1-to-1 risk to reward with over like a 60% win rate, and you're gonna be consistent. You can have a 1-to-2 RR risk to reward like max that you take mechanically, and as long as you're over 50% win rate, you're gonna be profitable. Obviously, with like 1-to-4s, 1-to-5s, now you can go down to like 30-40%, you still be profitable. But obviously, unless your psychology is good at taking those 6-7 losses to make it back in one, you're better off just keeping with a low RR, like a reasonable RR, like 1-to-2, 1-to-3, even a 1-to-1 if you want. But obviously, the key to consistency here is staying within your risk management parameters. So without good risk management, you will not be consistent at all. At all. Yeah, also journaling every single trade you take. Now, I use something called Notion. I journal every loss, every win, every forward test, everything. I journal it all because I like to keep my data, and I like to know how much I'm winning, what I can do to make it back, what I can, what I could have done better if I closed here or if I closed down here, why did I close there? What could I have done to maybe see that draw on liquidity was higher? Obviously, there's loads of different things that comes into risk management. You can be one of those negative risk to reward traders like Donvo and all that. But if you've checked on the internet, you'd see that he blew 1.7 million of investor capital from his negative RR trades. So like having a good RR, risking 0.5 to 1% max, or if you're on a live account, it's a bit different because you don't have no rules. With funded accounts, you have a maximum daily loss, you have a maximum overall loss, and with a live account, you don't have any of that. You can risk 99% of your account if you really wanted to. Obviously, it's not very smart, but yeah, I know some people who risk 0.51% on fundeds, but then have a large live account where they risk 3 to 5% on swing trades. There's different ways you can make money. There's different strats. Day intraday scalping, swing trading. My strat's more intraday, so I would never like take a trade off the 1 hour. I'm only taking trades off the 1 minute or the 30-second or 15 seconds sometimes even. But yeah, that's basically it. You know, obviously this checklist is here. You know, having something written down like this could help you psychologically if you're that type of person. You know, having it in eyes sight, and you know, having the criteria of your entries day and all that. But 100% risk management is definitely nearly or more just as important as psychology. Um, yeah, I'll link my TikTok in the description. I normally post weekly analysis on there anyway for free, because why not? I'll also link the Discord in the description. I think we're running a 5-day free trial still, so get in, see how you like it. We do live trades every day. Yeah, live trading sessions every day. I post educational videos in there, motivational videos, and obviously Nico's in there as well. So there's two traders for the price of, you know, one really. Um, but yeah, I'll like I said, I'll put all that in the description, and I'll see you later, guys. Next video is going to be how to read candles, probably. Yeah, thank you, boys.